right, hi. Good to be here. I'm Steve Murphy from Altus Group, the EMEA Channel Sales Manager and Sub-Saharan African Sales Manager for Altus. And today we're going to be doing a bit of a double act with one of our partners, OpenBox Software, and I'm going to be taking a bit of a big picture view, setting the context for PropTech and emerging PropTech and some of the solutions that we're working with at Altus. And then one of our partners, Dustin Strydom from OpenBox Software, will be talking about the very nitty-gritty, down in the weeds application of some of those technologies. Oops. Okay, great. So Altus is a leading provider of independent advisory services, software and data solutions for the global commercial real estate industry. We empower our clients to analyze, gain market insight, and maximize the value of their commercial real estate assets. We are a 1.2 billion public company listed on the Toronto Stock Exchange. We're headquartered in Toronto, but we have offices, 75 offices around the world, major presences in the UK, Australia, the Middle East, and all over North America. So we have over 2,500 employees, or 2,300 employees, and our approach to our business is to maximize the value of commercial real estate assets and portfolios through our two divisions, Altus Analytics and Altus Expert Services. Altus Analytics is the venue for our software division, and I'll come across that, come onto that shortly. And Altus Expert Services is where we provide independent technology professional services such as valuations and tax consulting. You may be more familiar with Argus Software. Argus Software is one of our premier brands. You may be very familiar with Argus Enterprise and Argus Developer. Argus Enterprise is our primary software for commercial real estate valuations, asset and portfolio management globally. Argus Developer and Argus Estate Master are used for development, feasibility, and cash flow modeling globally, very significantly in the UK. And Argus Voyanta is a commercial real estate data aggregation and reporting solution, which is you'll be hearing more about. Okay, so as I said, I wanted to take a bit of a step back and think about the context of PropTech. So before going into some of the emerging technologies, I wanted to look at what is global real estate. So Savills very helpfully put out a valuation of what is the world worth every year. So as a comparison, that's the China GDP at about 12 trillion, the EU GDP, the US GDP. All gold that has ever been mined, all equities globally at about 70 trillion, and all secured debt globally. Significantly, though, when we get to global real estate, you see that's agriculture and forestry, commercial real estate, and residential real estate globally at about 168 trillion. Together, global real estate is by far the biggest asset class in the world, and a good piece of advice that I've heard many times in my technology background is if you're going to set up a business, if you're going to do a startup, startups are hard. If you're going to do a startup, pick the biggest possible market you can find and go after it as hard as you can. So 228 trillion is a significant market, of course, and it's growing. So commercial real estate, global real estate growing between 5% and 7% per year against gold, equities, and other assets, still very high performing. So when we say PropTech, what are we really talking about? So what is the PropTech ecosystem? I'll kind of briefly just give an overview of this. It's a rich ecosystem kind of overlapping with other fast-growing areas such as fintech, construction tech, and also the collaborative economy, things like co-working, etc., and smart cities. I would put Altus And probably the fastest growing area of that, that model there would be the real estate fintech, the overlap between PropTech and finance. There's a huge amount of interest from venture capital into PropTech. So between 2015 and 2017, there's been an increase between 1.8 to 12.6 billion going into PropTech, a massive amount of money going into startups and established businesses in property technology. So just as I said, I wanted to step back a little bit and look at some macro trends. The familiar Tired and Wired lists from Wired magazine you may be familiar with. So there's a trend from monolithic applications in software to modular, but also in construction. Monolithic construction to more modular construction, on-premise software to online, perpetual license to subscription licenses, trusted advisors being how we invest our money now we're much more able to invest our money directly ourselves. Software is eating the world was the catchphrase for the very, very early stages of the software business in Silicon Valley. Now, AI is eating software is really where things are at. Increasing headcount versus automation, and information wants to be free versus information wants to be expensive. Okay, so I'll explore some particular PropTech themes. Obviously, it's a very big space. At Altus, we're looking at these three as areas where we are actively looking for partners and where we see areas of growth. So in terms of data aggregation, why do that? So there's a lot of legacy information wrapped up in PDFs, Excel files, etc. So digitizing the past to predict the future is what we're focusing on, and technologies that can do that. By doing that, you can reveal unexpected opportunities, and data is the raw material of automation and prediction, which has many operational and strategic benefits. So we just heard on the panel today from Magnus Fundergaard, CEO of Dacia here today. I would strongly recommend, if you're interested in data aggregation, to go and speak with him. So what does Dacia do? So they aggregate public and proprietary data, over 30 million commercial real estate residential properties in Sweden, Finland, and the UK. Deep property search, deep ownership information, market data with a very easy interface. They're really aggregating, centralizing that information, making it much easier for investors, for buyers, for contractors to find the next project. Land Insight, who I believe may be here today as well, are also really pioneering in this space. So they're looking at rapid sourcing of off-market land, ownership data to track and analyze portfolios, deep property search, again looking at vacant properties using the asset class, the class of the property size, building height, flood risk valuation. So you can get very specific. If you're looking for a particular kind of property in a particular location with particular features, then these kind of data aggregation becomes very powerful. Obviously, that gives you comparables, and in a very simple interface, again, makes it possible to surface up that information and make it much more usable. Previously, one might have to have gone to a town hall or to the land registry looking at paper records. Land Insight and Dacia aggregating that data really provides a lot of power around strategic thinking. So GeoFi, another very interesting company in this space, have the ambition of becoming the Google of geospatial data. They're tracking over 100 million buildings, 54 countries, and the ownership of those assets across 9,000 funds globally. The real-time tracking of those assets and portfolio values, which is for a business like Altus, where we do valuation as a core function of our business, is very interesting for us. And also, the data that they're able to surface up and aggregate is giving investors like hedge funds the ability to spot overvalued REITs, overvalued funds, because they now have an objective assessment of those assets versus just the reported values of those portfolios and the funds that track their values. And they're using that information to short those funds. So they're moving rapidly into automated valuations. Very interestingly, they've produced a tool called Grapevine, which aggregates not just property data, but demographic data from Airbnb, from Uber, from all sorts of places, credit history, and looking at, for example, where would be the next Shoreditch, the next Williamsburg, the next Prenzlauer Berg. If you're interested, they have a good paper on that. They've identified Seven Sisters in London as the next area for gentrification, which, if you've ever been to Seven Sisters, might be like going to Hoxton or Shoreditch maybe 25 years ago. So quite interesting information. So automated valuations, again, Altus, very much our core business. There is now a European Automated Valuation Alliance, and groups of people, groups of organizations around Europe. Home Track obviously would be familiar to many people, but also throughout Europe looking to standardize automations and automated valuations going forward. The increasing liquidity of property markets. I've always been kind of fascinated that I think the daily value of FX traded is something like about 5 trillion, and that's pretty much all digital. You could go online and buy bonds, hundreds of millions, billions of bonds today. Yet the commercial real estate industry commercial real estate and real estate in general is very illiquid, highly illiquid. I think it's a huge opportunity, and I think anything that can increase the liquidity of property markets will return huge dividends. So if you compare the inventory turnover of the S&P to real estate, the S&P is about 5,000 times higher than global real estate. So improving the liquidity by 5 times, so reducing the inertia in that system from 5,000 times to 1,000 times the S&P liquidity would create an estimated 50 to 250 billion annually, just in additional fees and new opportunities that come from that higher velocity of transactions. On that, the IPSX, you may be familiar with this, is the International Property Security Exchange. It's the world's first regulated stock exchange dedicated to commercial property. It's housed in London. It will be the only stock exchange of its type where a large commercial asset, say the Shard or the Gherkin, could be securitized and made public, basically an IPO of a building. It's a very interesting idea. It democratizes access to commercial real estate investments to more retail investors, much lower fees, increased transparency, liquidity. Valuations are determined in real time by the market, just like equities. So a lot of the inertia built into the system around valuations, again, removed. The velocity of transactions increased. And really energizes the commercial real estate derivatives market. So again, financial tools moving into an area that has never really seen them before. So futures, options, contracts for difference, robo-advisors, high-frequency trading. These are coming down the pipeline as the velocity of transactions increase. Organizations like ARCA, again, another financial tool, which is becoming more possible due to the digitization and increased velocity of transactions. They provide exchange-traded futures on the annual IPD indices for UK property segments. That allows you, if you're a fund manager, to buy a future in a segment which is growing, short a segment where you see a decline, and allows you to rebalance your portfolio. So again, financial instruments kind of encroaching into the commercial real estate space. Cadre, very interesting development in the US, is essentially, I think you could say, property crowdfunding for institutions and very, very high net worth individuals. So they offer a curated commercial real estate investment marketplace which targets deals in the 50 to 250 million range. It gives investors direct access to slices of individual commercial real estate investments. Deep transparency, much more liquidity options, investor discretion on deals, a much more liquid market, and the due diligence, they're really focusing on digital first as their approach. Due diligence using software and deep data analytics in order to give the market the information it needs, high net worth individuals, investors, to buy slices and build portfolios of slices of assets. Dustin from OpenBox will be speaking shortly about automation, so I won't go too much into this, but I will cover it quickly. So workflow evolution and automation, something that we are onboarding using OpenBox software in our business to deliver services better, faster, cheaper to customers. And most commercial real estate workflow problems kind of have breadth, but not a lot, I would say, not a lot of depth in terms of their complexity. A lot of the issues that delay projects, that delay transactions could be solved relatively easily with the right application of technology. It's something we're exploring and something we're doing. So we're seeing the emergence of best-in-class solutions there, things like OpenBox software, and again, all leading to increasing velocity of transactions, and that being a competitive advantage. Leviton, who we're speaking to about a partnership, do natural language processing on real estate leases and contracts to extract and digitize that critical information and allow that information to be then used more liberally throughout an organization. Rather than having information locked up in PDFs or Excel spreadsheets or Word documents, digitizing them allows them to become much more usable. So they estimate about 8 times faster to abstract a lease using natural language processing from 4 hours to 30 minutes per lease, which if you're doing due diligence on a pan-European portfolio, Polish, German, English, French, they can abstract that information quite quickly. I'll quickly go through this because I know Dustin's going to be speaking about OpenBox, but they offer robots as a service, which is workflow automation using Blue Prism technology. Does anyone know who this is? Lisa Doll. Yes, it's Lisa Doll. So when I saw this picture, I thought that's the face of a bad day at the office, right? So in 2016, Lisa Doll, who's the 14-time world Go champion, lost 4-1 in a 5-game match to deep learning AI AlphaGo, which is just down here in King's Cross. So I was really impressed by that. It's like world-leading technology, literally just around the corner. It's incredible. So what I wanted to point out here, though, is that after beating Lee and other world champions, DeepMind didn't stop there. They actually kept evolving AlphaGo, and there's multiple iterations since then of AlphaGo, and the latest is AlphaGo Zero. So what I just wanted to point out, in terms of the potential of this kind of technology, it's pretty incredible. So a later evolution of AlphaGo was what's called an unsupervised learning system. So the previous version was trained using human moves in the game of Go and then was allowed to play against itself and then beat the 14-time world champion. The later version, AlphaGo Zero, was literally just given the rules and the ability to play against itself. So from completely random play, it was on day 0, as I said, it just had the rules. On the 3rd day, AlphaGo Zero, just through pure self-play and learning, its abilities surpassed the ability of AlphaGo Lee, which beat the 14-time world champion, and in 4 out of 5 games. So in 21 days, AlphaGo Zero reached the level of AlphaGo Master, a subsequent version that had also beat AlphaGo Lee, and defeated 60 of the top professionals online and the world champion, the then world champion at 3 out of 3 games. In the biblical 40 days and 40 nights, AlphaGo Zero surpassed all other versions of AlphaGo and it became the best Go player in the world. So not only that, but the best Go player in history So out of thousands of years of human knowledge that had gone into that, that understanding of the game, in 40 days, an AI system had learned it all. Impressively, it did that by becoming 10 times more efficient than the original version of AlphaGo, and also using 10 times less compute, actually more than 10 times less computing power. So vast gains in using technology in that discipline. I think I'll finish on just this, this video, if I may. It's only very brief, but I think it really sets the tone for how... Oh, it looks like I won't be finishing on the video.
Thanks, Steve. I just need to do a bit of logistical PowerPoint changing quickly. All right. So just first of all, my name is Dustin Strydom, so I'm the Director of Automation Services at OpenBox Software. Steve's already done a great introduction speaking to a little bit of who we are, but ultimately we are a real estate-focused IT consultancy. We've been around for about 16 years, and we are the global leaders in delivering automation services to the commercial real estate industry. So skipping through. Altus Group, represented by Steve here, recently released a Cre Innovation Report. Now, if you haven't had a chance to have a look at that, seriously do yourself a favor, because there's some really interesting insights about how some of the leading CRE C-suites within the industry view technology. So some statistics around it. If you have a look up at the board here, when asked about the impact that disruptive technologies would have on the industry, when asked about AI and machine intelligence, I think only 28% of our CRE leaders said that it would have a major impact on the industry. When we look at big data and predictive analytics, which is even more interesting for me, even less, 24% said that'll have a major impact on the industry. And then when we go down to things like blockchain, it's sitting at levels of 15%. So I disagree, and I'm far more optimistic about how these types of technologies will be able to shape and change our industry. However, it's quite important, I think, to recognize that the leaders of our industry and the people that we need to get buy-in and adoption in order to make or affect change with these technologies, it's important to know where they're at and how they feel about this. Because without the adoption, without the stakeholder buy-in, we're not going to be able to make that change, and ultimately we're going to continue to be labeled as the technology laggards that we have been in the past as an industry. So, however, there's a positive sign in all of this, and that's this green statistic over there that says, when asked about automation, more than 50% said that most real estate processes and workflows could be almost completely or significantly automated. And adopted today. So that to me is really positive because of three factors, really. I see automation being able to play the role of a catalyst to enable some of these more disruptive technologies like AI, machine learning, predictive analytics, right? And I'll get to a little bit of the details as to why I think that in a moment. Secondly, process automation today can deliver massive cost savings. It's got the ability to completely remove human error and vastly reduce your risk factors within your business, and also gives you the ability to scale infinitely without adding additional headcounts to your business. And lastly, I think that automation has the ability to form the basis of an operating system to enable us to in an iterative approach, add more disruptive technologies like the ones we see here and like the ones that Steve was chatting about just a second ago. And I'll get to the details of that in just a moment. So firstly, before I get there, I just want to talk about what is robotic process automation. So could I get a quick show of hands in the audience? Who knows what robotic process automation is? 1, 2, 3, 4, 5, 6, 7, okay, 8. So It doesn't seem like a lot, but when I asked the same question about a year ago, I think only 2 hands went up, and one of whom was Steve. So that is some sort of progress, but there still is clearly a long way to go. So let me give you a brief outline. The best way that I like to describe robotic process automation is comparing it to outsourcing or business process outsourcing. So traditionally, the types of tasks that you would be able to outsource to lower cost countries, those tasks that are repetitive, rules-based and manual, largely mundane in a lot of aspects, you now have the ability to outsource those to software, right? However, software costs you less than traditional outsourcing. It also has the added benefit of no longer making any human mistakes, right? No human error. And also it comes with a large degree of controls which you can have within your own organization, which you don't typically have in the outsourcing industry. So by way of definition, it's a software agent that works in a robotic manner and has the ability to either partially or fully automate tasks that are repetitive, rules-based, and generally high volume. Right, so obviously the leaders in our industry have said that they're ready to embrace automation. And really let's talk about why this is a catalyst for future disruptive technologies. To me, by having automated solutions, we have a scenario whereby for the first time we have our CRE leaders getting used to having machines perform the work of human beings. And this is firstly a mindset shift, which is going to help to hopefully adopt technologies of the future. But also it provides this environment of machines performing this work in a very safe environment, because robotic process automation is just following a set of rules. It's not making any cognitive decisions, which some of your artificial intelligence technologies will do in the future. So a safe environment within your organization to get used to the concept, I believe will help to breed adoption going forward in the future. And secondly, this concept of automation being an operating system for future disruptive technologies. This allows you to automate the base layer of your organization, right? Until we have our data in the right state to facilitate more cognitive technologies, it's not going to work. Until we have our basic level of tasks automated within our organization, we're not going to be able to adopt some of the more disruptive technologies. And by doing this, we have the ability to, on an iterative basis, plug in more cognitive technologies as we develop and as they become more and more robust. Right, so another statistic from the Altus Innovation Report. This is where do our leaders believe that automation is relevant? So if you have a look at this, debt underwriting, capital markets brokerage, property management, asset management, budgeting and forecasting, and valuation and appraisal, all sitting above 52 or 50% in the chart. Right, so let's unpack some of those in a little bit more detail. So property management. We've been working with a large number of property management organizations and divisions within CRE businesses, and we've done some detailed analysis on a line-by-line basis, a lot of fun days spent for our analysts going through these businesses and identifying exactly where we believe automation can play a key role. Now, if you have a look at that stat, and hopefully you can all see it, but we talk about database management, service charge management, accounts receivable, accounts payable, client reporting, all sitting above 50%, the number of tasks that we believe you can automate within those areas. So how does that translate onto a total basis? Well, that means more than a quarter of a property management function can be automated using process automation. And that's before you even start getting to your more cognitive technologies. Now, what does that mean in terms of numbers? So in an organization of around 250 people for a property management division or function, that translates to a reduction in cost, net of the cost to automate, of up to $4 million per year, or around £3 million if looking at current exchange rates. So it's a sizable impact, and that's just the base layer of what we're looking at. Right, so moving on to valuations and appraisals. Altus Group, as Steve mentioned, are at the forefront of adopting automation technology to actually create value in their business. And also to pass that value on to their clients. And we're working closely with Altus to help them do that. So we're working with their consulting division who provide third-party appraisal services to, I think, 60 out of 70 of the largest property funds within North America. And ultimately, it's got to the point where we're automating all of the manual tasks that that make up that process. So our software robots today will receive tenancy schedules, income and expense statements, and CapEx statements from the prior quarter, all in various different formats, PDFs, Excels, whatever it may be, making sense of that data, receiving all of the Argus enterprise valuation files per property, and actually building out detailed line-by-line comparison reports, highlighting the variances between the prior quarter data and the current quarter data, and handing that to the valuer, so that on a quarterly basis, they don't need to do any of those manual steps. And this goes further into actually managing each iteration and the comparisons between those and the data load in and data load out of Argus Enterprise. To the point where this used to take on a quarterly basis a manual operator up to 4 weeks to complete the first step, and we've been able to achieve that for Altus in a matter of 35 hours, so less than 2 business days. You can imagine the benefits that they've been able to then see within their business and pass on to their clients. So finally, the last area I want to talk about is integration. So another statistic from the Altus Innovation Report was that more than 58% of respondents said that they are using many more CRE-specific applications today than they were 3 years ago. Right? I think this is a familiar problem for most organizations, and 59% of them said that they still don't have significant integration between those applications. Now, I'm a big advocate for traditional integration. It's still very much a part of our business at OpenBox and what we do. However, there is a clear trend that organizations are just not getting around to integrating and allowing their applications to talk to each other for various reasons, one of which being cost, one of which being time and just the ability for their IT departments to get around to these, and the third one being it's not always possible. There's some legacy applications. There are certain software vendors that don't allow you to integrate, and we're operating with vast amounts of siloed data in a number of different applications. Now, process automation has the ability to facilitate that integration in a far easier manner. It gives you the ability to do it cost effectively, far faster than traditional integration projects, and it gives you the ability to go beyond the constraints of some of the challenges in terms of even being able to integrate. So another area where it's kind of really seeing some fantastic traction in the market. Right, so finally, just to leave you with a few takeaways. Process automation is here today. It's solving real-world problems within the commercial real estate industry, and it's allowing us to rethink the types of tasks that we allocate to human beings. Things like property management, valuations and appraisals, and integrations are just 3 areas of many that a number of our clients and our peers are benefiting from through process automation. It pays for itself by saving companies time and money, and by de-risking businesses by avoiding human error. Process automation can be the operating system of the future for future disruptive technologies, and I believe it can be a catalyst to enable these technologies as well. And finally, and I think most importantly, the message I want to give is don't panic. You don't need to have your entire future digital or your future mapped out today. You can use process automation to automate and improve your business today and figure out and learn what's best to do tomorrow. Thanks very much.